Thank you to everyone who joined us. Today we had a great opportunity to host our next webinar with a very specific topic. Despite all the COVID continues create some kind of uncertainty, we suppose our economy shifts from responding all the challenges to the stages of recovery, and many fintech companies, like the rest of the financial system, have gone into override to respond to the crisis, cutting all the expenses and struggling with the investments and so on. But on the other hand, COVID opened new window for digital services, and in some kind for digital financial services as well. So we could not leave without our attention the topic of the developments of fintech in COVID and beyond. So today we will talk a little bit more about the challenges of the industry within this new reality, the core trends, some potential for future growth. And I'm more than very happy to introduce today's speakers. Please welcome Nataliia Pelykh, who is CFA charter holder, who is the board member of CFA Society Ukraine, and even the head of FinTech committee. And moreover, Nataliia is the lead business analyst at Ciklum. So Nataliia, welcome. This virtual stage is yours.
Thanks for the most excellent introduction, which I can ever imagine, probably the best which I can deserve. So thanks everybody who joined. We are more than glad to see you on this Thursday evening. And before we start, I suggested just to think of this webinar not like a one-way communication, but as the way for you to also engage in the activity. And the first part of the activity, I would suggest you to think, if not this webinar, what exactly you would be doing now. And we will test actually how you find the chat in the Zoom. So please don't be shy, find the chat option and type your answer. And we kindly ask you be more specific than answering work, because think of it as like a way of introduction of yourself to other attendees, because it's not just a webinar, it's like a way of networking. So use it as the chance to impress your colleagues, impress the attendees. Please check that your setting is set to attendees, all attendees and panelists in the chat. If you don't see the chat for some reasons, you still can use the Q&A section, but we will be more than happy to see the answers. What would you be doing exactly right now, if not this webinar? We will know that you're not sleeping and you're actually here with us. And your Zoom chat's also working. Oh, we have a champion. We have the first answer, which highly interesting, because this is the precise answer which says that Daria is working probably in IT, not in the traditional finance, because she would be preparing new epics for the team. That's how we will know how diverse our today's audience is. But not very active one. Probably people mostly listening via the phone, or they are still working in the meantime. So, or they doing refinement. Pelykh, I'm very happy to see you, because I'm like 95% sure who is the author of this comment. And it's always a pleasure to see familiar faces, even if it's them working. Yeah, we now know that we have busy people on the call.
Even if just our audience is so kind of silence, I will tell you what I'm going to do. If not organizing this webinar, we're going to organize the other webinar about the industry landscapes. So please just stay tuned, because we are always preparing something special for our members and our audience.
Okay, then thanks for those who answered. And I will be as honest as Anna, if not this webinar, I would be preparing another one, which is mostly not about the finance, but about the BA and UX collaboration. And you probably may ask whether I have time for real job apart from webinars. Yes, I do, but webinars is actually part of my job, particularly within this BA and UX collaboration, because as Anna mentioned, apart from being involved in CFA society life, I have full-time job, which is about the competency lead at Ciklum, which actually assumes preparing other webinars as well. So my CFA journey started probably in 2015. Since then, my professional life changed drastically, I would say. And that's probably why for today, we would like to suggest you to have some enlightening inspirations and to just broaden your minds and be more open to the new insights which we prepared for today. So basically, the plan is to talk firstly about the increased demand for the digital services which we experienced during the past year. Second thing that's not so bright in our everyday life, fintech companies, as any other business, also faced with some challenges, and we would like to dedicate the time for challenges as well. And as well, we would like to look more in the future and to talk a little bit about what will go next and what governments, because financial services was a traditional industry which relied on governmental support, will be needed. And of course, we will have probably 10, depending on the activeness of audience and whether you will have questions and how many, we will dedicate some time to questions. But don't think it's just about the questions. You can call it reflections. So if you will have something to share on your own, you will be more than welcome in that. So we basically live on the power of feedback. And before diving into the topic, we would like to avoid the curse of the knowledge. And last time we received the question, what is the fintech? So here is the most boring slide of which I ever prepared, because it actually explains this term. Eventually, people uses the term fintech for various reasons, for various stuff. But I like this one. This is the definition by FSB, which I liked, because it says that basically this is something like an innovation which results in either models, applications, process, products, doesn't really matter. Everything will fall in the category of the fintech. So since the last time we received the question how we would define it, this is not our definition, but this is the one which I personally like, for example. So first things first, about the how COVID actually influenced the demand in the services. And I like the quote from Ernest Hemingway, who said that there are basically two ways of going bankrupt, gradually and then suddenly. And this is very close to the trajectory of financial digital services, because it would be unfair to say that all the growth and all the increased demand happened just during the last year. No, it's not true, because there was a trend of increasing online payments, of everything going from physical branches to digital services. But the last year just accelerated this trend. So gradually and then suddenly would be the perfect description of what was happening during the past 10, 15 years. And there is even one interesting research which Anderson and Horowitz, together with Glimpse, they conducted, and they've investigated different dimensions of financial services. There was one particular research about how frequently people actually Googled and tried to find some options. There were fun things like buy used cars, open deposit account, and the most popular request recently was how to open bank account online. Because for the past 9 years, in the US, approximately 9% of the branches in the US physically closed. And it was not publicly announced, but in China, probably 800 bank branches, physical bank branches also closed. And there is a trend that the more social distancing we have, and probably it will not end, not in the months, not in the weeks or soon. With more social distances and more prolonged lockdowns, we probably need to say the goodbye to bank branches and move more and more branches and more banking services basically online. And there was also in one initiative a group of researchers which decided to go beyond the Google searches, and they've actually tracked how frequently people used the financial apps during the lockdowns, and to have this impact, like a meaningful, with statistical significant figures, they've took 2 years. And what is interesting here that Android finance category of downloads has the upward trend, and iOS is like more or less steady. No one knows why so. There is one assumption that iOS users are mostly preferent of entertainment, music, and pictures, Instagram or whatever, and Android people are more about the financial stuff. But this is just an assumption. No one knows why so. I guess it's more about the prevalence within the regions. And they've actually picked the waves of the lockdowns and the peaks of China lockdown, the first wave, the second wave. And what is interesting here is that the trend doesn't has a peak, which then like we have 3 months of peak and then forget it. No, there is a trend to have more and more downloads, and it's not like a stoppable trend. And there is basically a general trend that over the first half of the year since the lockdown, if we compare to the previous year, on global level, the fintech sector demonstrated the growth of both transaction numbers and volumes. And this is the super big number of 11% growth of half of the year. And you probably may think that 11% is not as fantastic, I don't know, growth or something like that. But this is the consistent with market indicators such as customer acquisition, customer retention. So market is like didn't lower. It has more customers. They remain with these companies longer, and they do more transaction. And 11% is still non-negative impact. It is still growth, but it sounds even more impressive if we take not overall global fintech growth, but we'll take several examples. Here, my favorite examples of exponential growth, particular for the quarter of from March till May of the previous year. There are several companies which reported significant exponential growth in 3 months. Just think of it like Square, which is all about 3x growth of deposit volumes in 3 months. Visa said that it's like almost 20% rise in US digital commerce, and Ant Financial, which is a popular one in China. Just think of it, it's like 400% growth in 3 months. And when they were projecting, this was the news from May, once they reported this significant increase, they said that if you take the year revenue, it's like 65% of your year revenue in 3 months. So it was like a blow up for particular commerces, for particular branches. It was this exponential growth was mostly about when people decided to go online and actually pay online and care about their savings because they lost their jobs. This was the like a pivoting moment for these companies. And there was a place for event which I like to think of like a new Black Friday of last year, which was May 1. This was the day, the big day in life of PayPal, which is the most popular way of transactions in the US, for example. It was largest single day of transactions. And this day beat Black Friday, Cyber Monday, all the days when people are actually going online and buying gifts for their families, for their relatives. This year, we ruined that trend and decided that on May 1, probably people, I don't know what they were buying, but probably they were preparing for the long lockdowns and probably for some kind of even harder COVID. So remember that day, our children will know it about the, like a Black Friday of 2020. And you may probably think that people actually go online and do the downloads of the apps just because they are bored. They are locked in their homes and they have basically nothing to do apart from going to the App Store and looking for the new downloads. But it's not true. It's not like really true, because the same initiative, a group of researchers which compared iOS and Android downloads, they've compared the different industries and the different downloads. And if you see, the peak is true. Peak is somewhere in spring of last year. People downloaded everything, starting from education to lifestyle and to entertainment. There was a peak. But then after that peak, all the industries demonstrate the downtrend. People basically are not interested in so many apps. They get used to the lives at homes. So they've installed everything they need. And only financial industry demonstrates like steady growth in downloads. So people are looking mostly for different options, for the options which work better for them, which probably cheaper, I don't know, have a wider range of services. And we will talk about the range of services later on today. But this is the interesting stuff, because people, even though they are used to the lives at homes, even though they installed all of everything of critical necessity, they still are interested in something more. And here I suggest you to practice a little bit in fortune telling, because there was a research which tried to answer the question, which of products demonstrated the increased adoption during the COVID. And there were 6 basic categories of apps: traditional banking, payment, lending, insurance, investment, and government. And I will give you a hint. I won't ask you about the answers, so you can just honestly answer to yourself. What would you think demonstrated the increased adoption during this year? And the right answer is that it was lending and government. The reasoning is very simple, because lending, people lacked money, and some of them lost their jobs or probably had the cutoffs of the salaries. So they were relying more now on lending. And that's why, since they cannot go physically to bank and to look for lending options there, they were looking them with online services and with the services. For example, if you have already some financial service from some financial company, whether it suggests additional lending options, probably easier payments, I don't know, lower rates, something like as an additional stuff, not necessarily the separate product. And government, which is also super popular and proved adoption thanks to COVID, because government was that authority which provided financial support to, for example, small businesses or for large companies which faced with troubles during the COVID. It was, for example, from travel, from financial services, and the products which help these companies or individuals to get the governmental aid demonstrated the increased adoption because they were not so popular, because people really, even though they were expecting the governmental support, but didn't receive that as much as it was demonstrated during the COVID. And of course, what else apart from payments? Because COVID demonstrated that in-store shopping now like an old trend, and it's true because it's hard to do in-store shopping if shops are closed. So you basically have no option rather than to go to your mobile phone or your tablet and start shopping there. That's your only choice. But what is interesting here is that it's like a really significant increase in the channels, because across the globe, and particularly in the US, 50% of more mobile banking, more digital services, because everybody now decided that they have the mobile phone and they can solve all the life problems having the mobile and having the delivery, and no one worries about everything else. And for the companies, what it means that the biggest struggle became that if people interact with whatever provider, whatever supplier of product or services, a headache became to make the customer journey from like end to end, from the initial decision to buy something to the payment, like as smooth as possible, without the redirection to 300 sites or requesting as many information as they need. For them, it's like all about the one end-to-end, let's call it a supply value chain, because for the customer, it's important not to worry how you can provide me the payment, how you can provide me the delivery. For me, it's like, if I decided to shop in one place, I want to go the whole way from the start till the end. That was about the payment and super increase of the. We have a question whether participants will have the presentation sent. The short answer is yes, you will have. Another one is about the challenges and how they coped. And I highly recommend you to not to answer to yourself, but try to impress the audience with your fortune telling and with your guessing power. Because how firms responded to COVID, they tried to launch a new product or service in response to COVID. And there is a research which actually counted this percentage in the FinTech sector. And if you have your wild guess of how many firms reported the new product or service as the response, you can be not so shy and put it in the chat. And we will see. And we will see. Oh, we have a guesses. 75, 20. And that's basically how we will know whether somebody read the report, which was sent as the link to the event. 65. I would say that there are very close answers to the truth. I guess we will. 50. I guess we will wait for 80. Somebody is very optimistic. 80. Okay. 35. I will give you the answer which was in the report prepared by World Bank and World Economic Forum. The true answer is 60%. So people who answered 50, 65 we have. So you were very close. You are the winner of this question quiz because 65%. And when I read what actually new product or service means, like what is treated basically as the new one, even if they added a small feature to existing product, it was treated like a new one. So it was very interesting treatment of what is new. But the figure itself assumes that firms were not waiting that they will survive through the COVID and everything will be fine. They were actually forced to change their models, to change their services and to adapt, basically. And when we talk about adapting to the new reality, what was the most prevalent changes which they were ought to do in order to keep the customer base, to survive in this competitive market, and to have these users which were looking in Google of what they can get in the fintech sector? First thing that companies needed to think of was a fee reduction, because it's much easier to have your audience still with you in case of the lockdown and lost jobs and cut off salaries. You need to think of how to make your services cheaper. Second thing was changing to onboarding criteria. It means that it became a little bit easier. It should have become easier to gain this market share and to survive, and to eliminate, let's say, 100 steps of onboarding the new customers to your services. And of course, payment easement, because everybody wants everything cheaper, faster, and as customer-oriented as possible. And still, the problem for the fintech companies during the COVID was all about that. Apart from obvious problems with capital reserve, because you had the reserve for unforeseen situation, and here is it. Here is the unforeseen situation, the most unforeseen that you can ever imagine. That's the time when you can actually spend your reserve and you have no sources to refund this reserve. The second thing that negatively was impacted by the COVID for fintech companies was the evaluation and the future fundraising outlook. It means that now they have much lower assurance that they will have a fundraising, they will have the investment if this is small companies, if this is startups. Previously, everybody was optimistic about the market growth. Everybody was given generous, let's say, investments, but not as generous as last year. And how basically they needed to survive in this new reality. There is a tendency to think that the only way to survive and the only way to get the proper funding, if you have such a market downgrade, let's say, is to collaborate. So every kind of partnership you can imagine, companies were trying to find the friends who has less investments, and it was all about, for example, if it is a lending company and the company which provides some payment services, let's make some union, and you will help me and I will help you. So they were trying to collaborate because that was the only way to have the funding, and then somehow split it evenly or not evenly, depending on the collaboration model. But just think of it as like drastic changes. If you will look here, you will see that it's something like 20, 30, 40% of decrease of financial position during the year. And if we talk not about just the general financial positions of the companies, despite of growth of the transaction volumes, which all about the market growth, when we talk about the operational performance of the companies, the most interesting effect here is that onboarding expenditure has grown. So it became more expensive to get your customers and to store their data. And if you ask yourself why, just think of it that previously there was much more online presence, offline, when people can get physically to either company or the bank and provide the information. And now they are supposed to attach 100 million documents which can be transferred via email, or probably there are some examples like Monobank has via Viber, I don't know, some other stuff. And there is much more information which is passed through electronic channels. That's why companies we're not actually ready to deal with such a data, and they had to adapt as fast as they can. And with this effect comes the risks. And I would say that the liquidity is pretty obvious one, because you need to repay, I don't know, you have to repay to your customers and you don't have reserves. Liquidity, the old problem, it just was very, very highlighted by the COVID. Foreign currency exposure, I would say, regardless of COVID, our children, our parents will always see that the biggest risk for any financial company would be a foreign currency exposure, because foreign currency market is always unstable. But the most interesting one here is cybersecurity. Because just think of this year when everybody went with their laptops, mobile phones with unprotected networks, and they got locked at home. What happened? There was an increase of attacks against the financial sector. And still, I suggest you to guess, because believe me, you will be surprised with the real answer. So no cheating, no Google, just give your guess. How do you think how the attacks against the financial sector increased during the first months of COVID? $30, $70, $60, $45. 20, 50, 65, 200%. I like the answer. 90. The majority of the audience is somewhere around 50 or 60%. And I must admit, I cheated when I put 2-digit, because in reality, this is the 3-digit. And congratulations to Ruslan, if I'm not mistaken, who put the 20%, because the real answer is a little bit above 200%. And just think of it. 200% in basically 3 months. 2 of them are like total lockdown, and the first one only rumors about China and stuff around the globe. This is the tremendous increase, like the one which we probably never faced before in such a short term. I would say that there was a precedent, but still not such a short term. And if you think why it's happening, one thing is a protection, because there are tools which are intended to protect our users from cyber attacks, virtual private networks. But people, in reality, most of the employees, when they are supposed to use VPNs, they don't do it. They do it from the home networks and go to coffee shops, I don't know, go to McDonald's and just use the local Wi-Fi, and everything is fine. This is the first thing. Second thing is that a lot of information, much more than previously, is now distributed via email, via working chats, so that they have the electronic form of probably secret information, which should not be shared in such a way, but people have basically no choice. And apart from regular distribution of the information via email or chats, there is also one interesting stuff which became much more popular during the COVID. Cyber attackers, they use the domains of senior executives at the company to use their trust in the companies, and on their behalf, they send emails to employees saying something about the lockdown or whatever news, just to have these gifts, let's say, distributed via emails. So This was an interesting trend which was tracked during the COVID. So be aware of your emails, trying to use your VPNs, and you will be a little bit more protected, I would say. And if we talk about the cybersecurity, you probably think that the regulation of the financial services, which is one of the most regulated services industry, I would say, in the world, will help. If you look at the screen, and you will see all these cool abbreviations. If you recognize more than two, you're cool. I would say that GDPR probably is the one that you recognize. Maybe you recognize 2 or 3 more, depending on which industry you're working in and how long you're involved with the financial sector. But for regular people, it is a bunch of abbreviation which has no sense for you. In reality, this is the list of the regulations which touches to somehow cybersecurity for financial services industry. And if it's hard for normal people, imagine how it's hard for anyone involved in the financial industry to understand how exactly they should protect the data, which exact requirement they should follow to be compliant. And the biggest problem here is that some of them provide explicit requirements on the data and on the security, and some of them just give the framework, give the understanding, but you cannot get explicitly what should be done. And some of them touches more narrow down industries, like, for example, credit unions, I don't know, banking, just banking, and just the payments, and some of them are wider. And you need to keep track how to be compliant with the narrow one and with the wider one. And this is the whole reality, which doesn't make the life neither in COVID nor beyond the COVID easier for fintech companies. And what governments decided to do? As an attempt to replace multi-layer legislation, guess what? They decided to introduce new legislation, which is called DORA as an abbreviation, not to mess up with the development DevOps actually requirements. So this is the one which was proposed in September last year, because European Committee decided that there should be a regulation for European financial institutions, because cybersecurity is the risk which was highlighted by the COVID. And they decided that they should have like a single place of regulation which will cover explicit requirements to mitigate these risks. This is still work in progress. So this was introduced like first attempt. I guess it's not finished as such, but just for your awareness, if you will be interested, you should know that there is an initiative, and it's probably will be initiative for the newest year, because it's not something that can be introduced once and without amendments afterwards. And a little bit more, not of the complication of all the legislation, but more about the bright sides and which legislation will be required for that further future trends. One thing that I wanted to talk today is basically the value-added services, because what is that? Everybody in the financial industry, if you think like 10 years ago, it was just getting branch online. So get your bank basically to have on your mobile, probably on your laptop, and that's it. But now it's all about different services. It's not enough to have the mimicking services of traditional bank in your, let's say, mobile phone, because there is a new battlefield which says that the customers should use the services of your company, not just because you provide the lending or you provide the deposit account or you provide whatever you call it, payment services. They will be looking for additional stuff which only you and only your company can deliver in the value in the way they cannot get experience basically in non-digital way. And there are two examples. One of them is one of my favorites. This is the example of value-added services, which you can call informational one. There is a trend in Asia, and it was very popular during the COVID as well. For example, how it works and what informational services means. In Asia, there is a problem of low-educated women. So female entrepreneurs, for example, they have low-level education on average in Asia and in India especially. And what companies provide? Lending platforms, which basically these female entrepreneurs may use, they provide the educational service where you can read why this product, what this product is for, what are the advantages, what are the disadvantages, how you can use it for your benefits. And it's everything is online, and it solves the problem that people sometimes are shy to ask a person because they are shy of their low education, that they really don't understand this lending, for example, a product. And second thing, it provides them the one place. So if you're using the services from this company, so this company provides you money and explains you how to use them in the right way. That's how they combine these two services in one and sell it as one. And the reason why this cheerful women with bracelets is here, because particularly in India, there is a special support for women who sell the handmade jewelry. Before COVID, they could go to the street and just sell it. Now, COVID, they cannot really get it. No, not much tourists. They are pushed to sell it online. And how to do that? They have additional informational services provided by government, for example, which help them to launch their businesses online. And another example, which is great response to COVID as the additional service to traditional lending, basically, is the eligibility checker. Because during the COVID, government suggests the aid to small enterprises. But to have this aid, you need to check whether you're eligible for this support, whether you meet this criteria, whether you can submit the form and hope for this aid. And what the companies did, they've introduced it within their websites, within their applications, so that people don't need to switch. And once they are in your one ecosystem of financial services, they could check the eligibility, let's say, submit the form, and via your application, get this, for example, money on their account. Profit. So that's how they use this combination of services and how they fought, let's say, for the love of their customers. But still, there is a lot of areas where governmental and regulation support is still a must. One of the most popular areas are regulatory support for eKYC. And if you don't know what KYC means, it's like know your customer. It's all about the activities, how to get your customer, how to onboard the customer to your platform. And you see here the due diligence as well, a remote onboarding. And last but not least is new activities and licensing, because to respond to COVID and to grow fast, companies are trying to be very inventive in which initiatives they could participate, they could collaborate when they are trying to get more funds. But the problem is that for every type of new activity, if you are registered as one type of fintech company, you need to have a license. So every time, this is like a headache for the company, and they want to have it faster in order to meet the market needs. Because if you will wait for the licenses for 6 months, then probably who knows what will happen in 6 months. And I highly recommend you, if you're interested in more, because I've just picked my 4 favorite ones and top regulatory responses from the companies, but World Bank and World Economic Forum provided much more. And my favorite one here is the remote onboarding still. And I would say that why we are saying this is the further trends, and absolutely sure that the governmental support there will be needed, because identification via biometrics will be a new reality. And right now, everybody cannot physically submit their documents, attend any office. Everything should be somehow from any location. And I will provide you, like, I guess we still have probably five minutes of real stories about client onboarding from any location, because how it works in Ukraine. In Ukraine, it works so-so. I've just recently blocked my online account, and to unblock it, I need to physically visit the bank. And when I asked why for the God's sake, this is my card, this is my personality, like I have a phone, you can send me, I don't know how many codes, I can enter everything. Just to unblock my mobile application, no, I need to visit the bank physically, and only one particular branch, not the other one. Another story about the client onboarding is that my friend moved from Ukraine to another country 5 or 6 years ago. He could not close the account in the bank because the bank required his physical presence in the country. So for 5 or 6 years, he has 2 accounts there in that bank, one deposit and one loan. And the interest from deposit serves his loan rates just because he cannot close it. So self-serviced accounts just because we cannot onboard. But the reality of other countries and some banks of our country as well assumes that not just the banks, all the companies which provide financial services will move more to digital data transfer, especially when we have facial recognition, when we talk about the facial recognition, and when we talk about the biometrics. And just to feel, so that you feel a little bit even more acquainted with unknown abbreviations for you, it may be true that you see these abbreviations for the first time in your life. It may be true that you already know about them. But let's say that right now in payments area, which is probably the most traditional one, which everybody is thinking of when you say about the fintech, it's all about the payments, like on the first place of all. It will be all about the more and more intensive of different ways of payments. Peer-to-peer is just think of when you have your mobile monobank, just to transfer money from one account to another one. Consumer to business, when we actually shop online. So this will be C2B. B2B, I guess you already know. And one more interesting one is central bank digital currency. So central banks are jealous of blockchain idea. They also want the cryptocurrencies. It's not they want, but that's probably the initiative on the governmental level, which is part of the European Committee initiatives, World Bank, and all this governmental and world regulation institutions, that eventually we will move to the actually idea that central banks have their own digital currency, because it's safer and because it's much more robust model to live in our century. It's still not so. It's still not the reality, but there are more and more evidence that we are moving to that new reality. And one more thing that you should be aware of is open API solutions. Probably you know that, like if we take probably 20, 30 years ago, everything that is stored in bank is the secret treasure. No one ever knows, and the data is super highly protected. And what is Open API? Open API actually means that you have the data much more exposed to the external usage, And OpenAPI will be all about the trade-off of how we balance the costs of financial companies which deal with the secure data, which very personal information, because what can be more personal than your money, and basically how it will be balanced as the cost, because OpenAPI is more cost efficient, is safer, is lighter than to have the data center for each company, which saves the data only in the local storage. But OpenAPI is something like as an area is still under very heavily unclear governmental regulations. There are countries which have introduced the incentives, have the proper regulation. This is United Arab Emirates. They are like super cool heroes in that area. There are particular countries which are more open to introduce OpenAPI within their financial sectors, but it's still on the global level. No one understands how it will work, whether it will be safe, how it will be regulated. Who knows, maybe that DORA regulatory document will provide more regulation in OpenAPI. But just for you, as the broadening the horizon of your mind, if you will be interested in reading about the OpenAPI and whether it's a good stuff or bad stuff, it eventually will be reality. And the problem is just how it will be introduced, how it will be regulated, and how companies will adopt it and at which level. Maybe we will see it. Maybe we will live in the world with all open APIs. And one more thing, as the result of the last feedback, people were asking about whether we can read more, whether there are insightful sources. So if you are interested and you want to read more, you will get the references. Some of them were used in the slides deck. And you're more than welcome to ask the questions if you're interested afterwards. And as I said, just it won't be one-way communication, just two-way communication. Just give a sec and ask yourself, how many things did you find insightful today? And if you cannot count precisely, you can just put a range and we will know whether you were very attentive and whether you find it insightful or not. If it will be even one, it's still fine. It's not a hard mess. I didn't ask you to compound the interest rates. So you can count afterward, 77%. Thank you. If anybody has the question, thank you. Data protection or anything relevant information regarding it. New ways. Oh my God, I don't know, but probably I'm not in the position to provide you a super cool guide how to protect yourself from cyber criminals right now. I guess we need to arrange a separate discussion on that. And Alina, I can find you and we can talk about that. But in general, even in that report about increased stuff, it was not about the new way. It was that people at some point ignored the old way. And right now there was a trend, no, let's call it an article posted about how people receive the malicious content. LinkedIn job offers, emails from executives at global companies, and there is no new way of protect against that. There was the hackers are very inventive right now, and if you don't use this phishing email, if you don't check the domain, if you open the content of unchecked, let's say, mailing list, then you're just more exposed. So unfortunately, I don't know new ways. I just know about the new secret contents filled in the emails and LinkedIn job offers. So use the VPNs, that's what they recommend, and don't open the emails if you don't trust. But I guess I can check. Anzina probably would like to answer the question.
You know me, Nataliia, I'm like, I don't know how to tell it in English, but tech is definitely not my side. I don't know nothing about VPNs. Not the best example, actually. I didn't guess anything that you've just put to the quiz. I've just, I did nothing about that. And while we didn't have any other questions, I will ask like a very full question, because from my side, it was like, I think more than 75% insightful and new for me. If I will ask you, what are the like core 3 top trends for fintech or tech industry for the next, let's say, 12 months? What do you think?
I would say once I read the report from Deloitte, they put 6. I still remember only 3. So whatever number 3 is the only number which any person could remain in their memory. So if it was my personal choice, I would say that what they do, they count on value-added services. Second thing, how to make the digital experience of any customer end-to-end. So to have the journey without leaving their application. And third thing, I guess there will be some sort of collaboration, partnership within the companies. We won't have, I don't know, 100 companies providing the similar services within the similar region. They will somehow do the partnership and alliances.
Perfect. Thank you so much. And the other point, as I'm not very good in tech, but I will ask about...
But you're good at asking the questions. So.
Not at all, thank you. Okay, the last question from my side. I was thinking of the following thing. Okay, we have now the problems with the cybersecurity and the issues with the data protection and so on. In the several years, what is the chance that we will not see any problems with the cybersecurity, as all the people will learn how to use VPNs and all the data protection things, actually?
The problem is that once we learn the data protection things, cyber attackers learn the new things, how to break this protection. So I wouldn't say that we will be ever 100% protected. This is my personal belief, never ever. So I guess the cyber attacks will remain as the trend, will remain as our reality. And I guess the ways of cyber attacks will get more and more sophisticated. And that's why this regulation, this compliance and security should get up to speed. The biggest challenge is to have the speed of sophisticated cyber attacks with the same of sophisticated data protection. So that's how we will survive. I would believe probably that's the only way to do so.
So we will keep the fingers crossed that we will be like on the.
We will be as fast as fast learners as cyber attackers.
So at this point, I would like to say thank you to Nataliia. For me, it was an insightful presentation, and I suppose for everyone who didn't ask the questions, because it was insightful and clear and understandable. So no questions to you. You will get the presentation, the recordings of the event today or tomorrow by your email. So make sure you just look through and raise the question to Nataliia and just try to contact. I would like to thank Nataliia once again for the presentation. It was perfect. I would like to thank our audience for joining us, for spending this evening or just late afternoon with us. And please keep tuned, because we are preparing a lot of other events, and especially like the hard skills, your beloved valuation workshop, and actually new project, which is industry landscape events. So please stay tuned. Thank you so much and have a good evening.
Thank you. Goodbye.